Hi, my name is Fan Yang, your Chief Currency Analyst here at ForexMinute.com. You're watching today's Forex video briefing. It is Tuesday, May 26th, and we're in the morning part or about to get into the US session. The Euro-US dollar pair has been sliding since finding resistance at 1.4666 a couple of weeks ago. Let's follow up on this pair with a trade idea. The daily chart shows that the 1.4666 resistance was in the previous support resistance pivot area in January and February, suggesting that this is still a bear's market. Okay. Now it has been falling and it has fallen below the 1.10 handle, which crosses many support factors, including a rising trend line, a support resistance pivot here, and at around 1.1060, and the 150 day simple moving averages. So all these support factors are broken, and the RSI, well, the RSI should break below 40 in the bearish continuation scenario. Okay, so we have most of our bearish continuation signals completed. Now the market is in the short-term bearish mode, while the medium-term mode appears to be neutral bearish. Right? We're kind of neutral after we had this RSI tag 70 after price broke above these 50 and 100-day moving average, but there's still that bearish bias since we saw resistance here at 1.1466. Okay, and on top of that, with the current stance of, well, first of all, in this scenario, we can look for a dip towards the 1.0462 up to 1.0520 lows on the year. And a more conservative, less aggressive, less bearish target could be the 1.06 handle. But given the current stance of the ECB versus the FOMC, we should take a slightly bearish bias. So be careful trying to buy from these support levels. I'm just talking about target for the bearish. If you put on a sell, we can't expect the market to try to test these lows here, given the current central bank stances. So if we see, let's go to the 4-hour chart. If we see a short-term pullback, okay, we can expect resistance below 1.12. In fact, a break above 1.12 would take away the bearish bias and put our bearish continuation outlook on the shelf, and probably put pressure back on these highs here, 1.1466. So 1.12 will be a key resistance, but a bearish market shouldn't even let it climb up there. We should find resistance below that, possibly at 1.10, but we should also look at the RSI. If the RSI comes back up around 60 and turns back down, that would be a clue to again sell on a pullback. Okay, and that wraps up today's Forex video briefing. Thanks again for watching. Trade safe, trade well.